So we had a few questions on the electric vehicles, the renewables sector. Any companies in those two spaces where there's pricing power? Thoughts on that?
I would just say that we feel like our bread and butter is these businesses where kind of the winner has already been decided. Like we think a lot about Coca-Cola. It's like you could have tried to pick like which soda company was going to end up being the winner. But you didn't really have to do that. You didn't have to take that risk because you could have just waited and seen who the winner was and then bought. And because Coke was, as long as you buy a business with a great economic model and a big moat, then we believe that because investors are overconfident and attracted to sort of risky, get rich quick stocks, that these the types of businesses we own tend to be sort of perpetually underpriced. And so Coke would be a great example where you could have bought it in the 1920s. You could have bought it in the 1930s. You could have bought it in the 1940s. You could have bought it in the 1950s, 1960s, 1970s, 1980s, and you still would have had above market returns. You still would have generated, great returns over time. And so the EV space, we think it's too early in its development. And so it's not clear who the winners are going to be. I would make the analogy to the internet, when the internet came along and you had all these search companies. And so you had Alta Vista and InfoSpace and things like that. And everyone was making bets on which one would be the winner in the late 90s. And then they all collapsed. And it turns out that the winner hadn't even gone public yet. So Google didn't go public till something like 2004. And so we just think that it's sort of a fool's errand to try to predict these things too early. But if there is a business that comes along that has significant network effects and where we think that the industry, is going to continue to grow at least as fast as GDP over time, then we'll definitely look at it and maybe add it to the portfolio.
It's usually the users of technology that benefit from the technology as opposed to the investors themselves. And so just a simple example of that in the EV space right now, you read about and see surveys of a lot of happy Tesla drivers. And Tesla, now it is true that if you looked and had you bought Tesla stock, the stock has done incredibly well over the last decade. But what I would point out is it'll be interesting to see what happens over a long period of time, because I'm not convinced that there's actually pricing power there with Tesla. And as competition continually steps into the market, I think it's going to drive down the pricing of electric vehicles. Now, it could be that maybe, there's certain things that allow Tesla to have pricing power. It might be that there's a social status element to owning a Tesla and they decide to go that way. Kind of like owning a Ferrari, for example, but it doesn't seem that that's what they're trying to do. But sometimes there could be a brand recognition that allows you to generate extra high returns. But in general, if you look at just the electric vehicle market and the auto market, gross margins are 15%. That means that if you sell a car for $100, it costs you $85 to make it. That's just to make the product. We haven't even talked about paying, selling general and administrative expenses or advertising expenses. We're only talking about building the machine. And compare that to a lot of the businesses you own, where many of them, you're talking about 70, 80% gross margins. So they sell it for $100. That means that they made it for $20. That's true. That's real pricing power. So, and we could go into 3, 4, 5 different ways that potentially Tesla or other electric vehicle makers win and have pricing power, but we're just not convinced that it's going to exist. And it's certainly, we don't know who the winner will be, and we don't even know if the winner exists yet. So we're just kind of taking the back seat on both EVs and the renewable sector.
Awesome. Piggybacking on that, what about the technology that goes into electric cars or the coming automated car market? Companies that make technology that serve a huge market as opposed to the companies that try to compete for the same customer with similar products.
It doesn't matter. I mean, so one that when we were talking about this last night that Brian brought up was just semiconductors. So you think about some of the companies like NVIDIA, ASML, which makes this very expensive lithography machine that's pivotal in making some of these chips, or Taiwan Semiconductor. So semiconductors are going to be in many of these products. They're going to be in artificial intelligence. They're going to be in they're in gaming. They're in crypto. They're in all kinds of things. But again, I would say that we feel like Intel used to be dominant in that area and now has fallen by the wayside. And we don't think it was obvious that was going to happen. And maybe now they've got new management, and maybe they'll figure it out and then be a great competitor. And then we also worry. So we're nervous about. We still aren't confident that any of these businesses have that enduring pricing power from a network effect or low cost production or things like that. But then we also, in particular on the semiconductors, I would say, worry about the cyclicality of the business, because right now you've had this situation. There's this saying that we really like. That's I've never seen there have been many cases where there's been a glut never followed by a shortage, but there aren't many cases you can point to where there was a shortage that wasn't followed by a glut. And the reason for that is that, you have this period where you've had these supply constraints. And so everyone is like double, triple, quadruple ordering to try to get these products for their customers while the getting is good. And then something happens to cause demand to go down. And then you have this massive inventory, excess inventory that has to be worked through. And so we think that a lot of the companies that we own are essentially global, royalties on global GDP. They're sort of the railroads, but NVIDIA and some of these other companies might be more analogous to sort of the railroad tie makers, where if there's been sufficient capacity built out using these semiconductors, it could take years, just like it did for like Cisco and some of the telecom companies in 2000 to grow into that capacity. And so we think it's just an area that has both significant cyclical concerns and where we're concerned about just disruption risk over time.
Awesome.
By the way, I just had dinner last night with a couple, and the gentleman, he does crypto mining for his career. Like that's what his profession is. He's just been a crypto miner. And he was just telling me about how all these chips are, with crypto completely collapsing. Now you can just see all these chips going on sale. And so to your point, Elliott, that's part of the fear with these is how much of this profit was crypto? Crypto gaming and how cyclical will it be? And then like with Taiwan Semiconductor, it looks like this wonderful business, but there's always lingering in the background that fear of, does China step in and what happens to your Taiwan Semiconductor shares? So.
All the stocks we've mentioned should not be considered a recommendation to buy or sell the stock. Consult your financial advisor for your specific situation. You can also request from YCG a list of all the securities that we've recommended over the last 12 months. Thanks for watching. Check out our other videos and we'll see you next time.